where do each of you see the state of the market today, and what's the total addressable market in your view? So we'll start with Danish. Give us a history of payments and evolution in Pakistan. What I will say is that it's one of the reasons why the infrastructure layer is so important is that if you're truly going to do pure fintech and lending in the future, you need this transaction data at every level. And so I know it sounds like infrastructure is very boring for a lot of people, but this is the fundamental layer on which the future digital economy is going to be built on. So Danish, we'll start with you in terms of your thoughts.
Yeah, sure. So you asked me about the target addressable market. I think each one, I think is really which part of the fintech ecosystem or the landscape you'd like to work on. So I mean, just for disclosure, like for NayaPay, for the consumer platform, we look at we're starting off with student freelancers and young homemakers, total addressable market of over 60 million. And we went for this target market because this population is extremely underserved, underbanked. They find it very difficult to open bank accounts because they don't have a source of income. Banks compliance departments that consider them high risk. We consider them having the highest lifetime value. So just that's what we're targeting on the consumer side. On the merchant side, it's 90% of the 3 million merchants are unregistered. We're starting off with a smaller group there. But if I can just quickly, I have a quick slide that I put up. I can maybe share that with you just to give you our view of like landscape. It's very high level. But if you allow me,
I think Ali has those controls. There we go.
Okay, are you able to see this?
Yeah.
Okay, so the way that we look at it, and this is applied to other markets as well. But I'm sorry if it's really high level and it doesn't get into a lot of details. But the way we look at it, initially consumers use cash, merchants accepted cash, and for international, we consider also important because Pakistan needs to be connected to the international financial system. You had, if you lived that long, you had traveler's checks in addition to foreign exchange, right? And then the world somewhat moved to bank accounts. You have a large monolithic banking system, core banking platform. You have cards that are issued. This is your digital instrument. Maybe checks, checkbooks. Maybe there's a traditional checkbooks in between, but I consider this digital. And then you have POS machines, IPG. We think that this is now quite it's kind of I shouldn't use the word legacy, but it's quite well established. POS penetration in many markets is very large. And then you have these you have the likes of IBFT and ACH in the world, which is quite mature platforms for merchants being able to accept payments. POS probably being the largest, most commonly used. And for international, you have the likes of SWIFT, Visa, MasterCard, as well, cross-border transactions. And I think that, we look at that as payments 2.0. And what we see globally, especially in, markets such as China and the Far East, also parts of Europe and maybe the US to a certain extent now with FedNow, like we're seeing that, multi-currency wallets, they're lower cost, they're much more nimble. You don't require a monolithic banking system. They're fast to open, and so the likes of Revolut and others, started off with this, low currency wallets, low cost wallets, very nimble, and then merchant acceptance. We see what's happening across the rest of the world. The likes in India, you have UPI, in Brazil, you have Pix, in China, you have a very well-established QR network. And so merchant acceptance is moving over. These are lower costs, faster settlement times. And then international rails, you're getting disrupted with the likes of Wise Remitly, using their whole pre-funding mechanisms to do instant transfers and lower cost. And then you have international aggregators taking over. So, we think that Pakistan has the potential to jump from payments 1.0 to 3.0, and there'll be many opportunities across the landscape, right? People who want to focus on merchant acceptance, international rails. We already have some international wallet players coming in, setting up, working on these remittance channels. But we think generally like there'll be transition from 1.0 3.0, and it's simply it's just faster settlement time and lower costs. And Pakistan really has this opportunity to do this leapfrogging. And the government is already moving towards, the central bank it has introduced the likes of RAST, similar lines of PIX and UPI. And I think that really is will be a great catalyst to bringing Pakistan into this payments 3.0 landscape. So that's just my view. I don't know. Those share thoughts.
Omer, feel free to chime in
Yeah.
On your thoughts on the same structure.
Yeah, I think it's become inevitable and unavoidable for the state machinery, specifically the tax machinery and the central bank, that they have to push this mandate. It's not only because of multilateral commitments that we have with IMF or the World Bank or Asian Development Bank, but it's also coming out of the necessity that we are unable to squeeze out more revenue or any growth, any capital for infrastructure from the existing streams. So digitization as a means of a financially included economy to reduce the black market, which leads to other vices within the economy in terms of smuggling and inflation, and along with the fact that we have a porous border and the trouble that comes with that. So it's become unavoidable, I think, for the state machinery, and a couple of pillar institutes such as the central bank, the tax machinery, SECP, FIA, and NADRA. I think everyone's thinking about or have taken some drastic measures over the last 2-3 years to ensure that we continue pushing forward. I agree with Danish that we will leapfrog from 1.0 to 3.0. I think on the supply side, we've always done well. We're quicker in adopting certain infrastructure pieces, whether it's at the state level or in the private sector. The real struggle is that the right political or economic policy environment that it requires to drive adoption across the country, that's always disconnected with some realities, and it's broken, and we take one step forward and then we have to go back, and we've seen it so many times in the recent past that you take one regulatory step and then you pull back, or you take one tax step and then you pull back because you simply are lacking you're not cohesively working on the subject between different groups and institutions, and also because I think we lack the political will, because these things will turn into a lot of noise and loss of political capital. So it's unavoidable. It is happening. I don't think the issue is about the infrastructure, because we've always been able to produce certain things faster than many developed economies as well, in terms of our IBFT infrastructure, or what we've done recently with RAS, the way we had NADRA way before other regional players. So it's really about how do you drive adoption, which is where policy instruments will have to have a significant impact in making sure that this very large non-included population is part of the economy, and not only part of this economy. If you remember back in the 90s or early 10s, they were talking about documentation of the economy, and that had to shift immediately into digitization of the economy, because it's not really just about documentation, it's about digitization. So not too worried about the supply side issues, the infrastructure. There's enough talent within Pakistan to support the industry or to leapfrog. It's really about the state has to play its part in making sure that the adoption is driven with a concentrated effort.